Hi everyone, hope you're all doing well. Today we're going to take a look at B&M stock because yesterday was a very interesting day for B&M. I was going to say a crash, but it wasn't a crash because it actually ended up coming back and most of the losses it took during the day actually got bought up. So it wasn't actually down that much yesterday. I saw the messages though when the stock was down at the worst point, like down 11%. There was a lot of panicking messages coming through about what's happening with B&M. So obviously, the fear taking hold of people. So just be careful, guys. If you're in that position where a stock is down 10% and you're panicking like that, I would honestly suggest that going to the index investing is the way for you guys, because that's only, like a small drop. Imagine when we have like a year, 2 years of stock market crash and you're panicking that much, guys. If that's affecting you that much, be aware, you're going to see more drops than that. But obviously the stock did kind of come back for the rest of the day. I probably should have done a video on YouTube about this, but as you probably could tell, I had already recorded my video before the B&M drop. Mondays are just normally like a busy day for me where I'm like busy from like 7 a.m. to about 8 p.m. at night. So I normally like to get an early recorded video in on either the morning or towards the back end of the night on Sunday. So there's a video for you guys. But obviously, this news dropped at 9 a.m., which was like the worst time to do a video. So I thought, you know what, I'm going to do this today and then I'll try to do a Hims and Hers earnings review hopefully tonight and double stack it for you guys. I've not gone through the earnings yet. I'm so behind with so many things, so I'll try to go through those earnings today and then I'll probably get that Hims and Hers video to you towards like 9-10 o'clock tonight. So I'll try to get it all done. But B&M, really interesting day because the stock opened up. It didn't really move down that much, which really surprised me. I thought even though the stock has been so beaten up, I was thought this has surely got to push the stock down slightly from here. But it didn't do it for a little bit, but then as the morning went on, it went lower and lower and lower. I thought it was going to be a pretty decent drop, to be fair, and I actually put a little bit of a short CDF on it, nothing too much. I think I only made like £35-40 on it. It's a bit of a Nando's because I was like, I'm sure on a profit warning, the CEO going, that's going to spook the market. I sold out a little bit too early. I posted on the Discord about it, and then I was thinking, well, you know what, I'll tell you what I did a little bit later towards the end of the video actually. But I mean, the drop really was quite significant. I mean, the worst point of that drop yesterday, when we entered around the £2.57-ish range, we actually ended up at a point where we were actually lower than where we were. I was going to say at this point, the Liz Truss point, is even worse than that. We actually got to a point where we were lower than where we were during the peak fear of COVID, which was just like bonkers, absolutely bonkers, because you think about the fear in that time frame. Like, we didn't know what was going on. How long is everything going to be shut down for? This is a retail shop, so obviously these guys are going to be affected more than anyone else. And to look into context about where the business has come from in that time frame where we were in 2020, the company was doing around about 3.8 billion. We're up to about 5.5 billion. You look at the profit, 203 million. We're up to 326 million. So the financials have majorly increased since that point in 2020, but yet the fear that's around B&M right now has then pushed the stock lower than where we were during COVID times, which shows you how low really that the stock is kind of beaten up. I guess you could argue the case about more valuation metrics, but I think that is a really good context about how much fear is right there in B&M right now. So 8 times earnings, which is quite low for a retailer as well, especially a retailer like B&M that obviously has pretty decent amounts of profitability. This company throwing off 300 plus million a year in profit. That's quite significant. You don't get many retailers with these higher end of profit margins, and obviously 8 times earnings. I think on a forward basis now, I think that put it down towards a 7 times forward earnings. And even this year with all the problems that B&M have, I mean, we haven't got the updated broker notes just yet, but we're still expecting revenue to grow this year and next year. And from a profit point of view, yeah, it's gone down slightly, but it's still pretty much, it's not seen a major decrease here. And even next year, we're expecting a decent-ish increase, even with the big pressures of the NI coming in from the budget. I mean, that might be the fear, is like, okay, they've had a tough year now, but when the new budget comes in, maybe that makes it even worse than where it is right now for them. We don't know. Maybe that's what's kind of being priced in here. But I mean, how much more of that fear do you need to be priced into the stock? The stock is already lower than where it was, at the COVID times. You look at where we were in December 2023, or even May 2024. I mean, let's go to where the stock was a year ago. I mean, where we were from about a year ago, the stock's fallen half its value. So surely some of that has to kind of be baked into the stock here. I don't know anyway. I'll talk about what I did with B&M a little bit later on in the video as well. So let's just look at the announcement here. So the company today announced that Alex Rousseau has advised the board that he intends to retire as group CEO. With immediate effect from the 30th of April. So that's very soon. Like for a CEO to do that, like 2 months time, that's very, very soon, which is strange. Something has happened there. We don't know what that is. The words retire, I can't see that happening because I believe he's like in his 50s. That's relatively young for a CEO. He's been the CEO for 2 years now, I think it is. If I just have a quick look at can I have a look at the management team? Does it say how long he's been in here? Yeah, 2.4 years. Very strange. You don't normally see a CEO give such short-term notice, and you don't see them only retire at that sort of age, and normally 2 years in, because if you were looking to retire, you wouldn't have took the CEO role 2 years ago. So that is very strange. So for me right there, that is, and obviously looking at the share price performance, I'm starting to think, okay, he's probably it could be something else, family related, medical related, which obviously they've not discussed or disclosed in here, which is absolutely fine, or he's been pushed. And I would be to the side that he's been pushed, because obviously to be only in the business for 2 years, and since you've been in the business for kind of 2 years, you've seen the company lose half its share price during your kind of time frame. That's not good. That's not good. You know, that's a very bad, unfortunately, the share price is a big reflection of the CEO, and that hasn't been great. And the other thing as well with this is that obviously he was the CFO. He became the CEO. Historically, CFOs coming CEOs don't normally make good CEOs. That is a little bit of an issue. The kind of first month you kind of come in as a CEO is kind of like a free hit. Like you can pretty much get away with, no one's going to really judge you in the first 12 months. It's really in the next 12 months that you get judged, okay, has this guy been a good appointment? And as we look right now, he's kind of in that next 12 month period. He's had his little, we'll take it quite easy on you. We're now into the extreme bit. You look at what has happened. Well, now we're kind of judging you a little bit serious. In your time frame, the share price has lost half its value. And the other thing is that you've just done what we'll get onto in a second is a profit warning. And also then you've done another profit warning a few months ago. So a back-to-back profit warnings are never great. And that's obviously an issue there, especially when you're so early into being the CEO. You want to see upgrades, not downgrades. The other thing I've got to say as well is that he was probably the most confident, may I even say arrogant, maybe cocky CEO I've probably listened to on a webcast. I've never seen a guy seem so confident at like hitting financials. I remember listening to the Q2 earnings, I believe it was, and I've never seen a CEO sound so confident that he's going to hit the guidance, he's going to deliver fantastic numbers. I remember he came out with a statement, or he said something on the lines of, "You guys know me, I always aim for the top end of the guidance, and I normally hit the top end of the guidance." Now, as a CEO, when you've only been in the job for 2 years and you come out with statements like that, you got to be hitting the top range of the guidance. You can't then make that statement and then in the next 2 periods come out with 2 profit warnings. So, yeah, I'm looking at this here thinking that with the time frame that he's been in, the share price, the 2 profit warnings, I think he's being pushed by the board. And for me, when I actually saw that he had been pushed from the board, I actually thought that this was good news, because I looked at what he's done in the last 2 years. It's not been great. Obviously, profit warning, he shouldn't get into a position where you're having back-to-back profit warnings, especially as a guy that's been a CFO. You would expect especially to have control of those numbers. We're in that second year. Maybe there's someone better for this job. So I actually looked at that and thought, for me, I actually looked at this as a bit of a positive here. I thought they could have done a little bit of a better job in the last 12 months. So I'm absolutely okay with that. Obviously, then we got the profit warning. So the EBITDA guidance was changed slightly. They said that it reflects the current trading performance of the business. So we heard that January actually started pretty strong. So I'm assuming since they told us that January started strong, we've actually seen a deterioration into February, is what I would guess as well. An uncertain economic outlook. Obviously, the big issue is obviously because of the changes with the budget. How many retailers have we heard say that so far? Obviously, not great. We've got a bad government at the moment. They're making bad changes to the economy. Another business obviously blaming the government, and that's also something partial, is that a lot of these UK companies, retailers, are all massively sold off because of the impacts that these governments are bringing in, and how much is that kind of priced in now? I don't really know. Worth pointing out, I actually didn't mention at the start, obviously it's pushed it towards a 5% dividend yield. I think yesterday we got to a point where it was like a 6% dividend yield yesterday, as well, and obviously if you get those special dividends at any point as well, yeah, it's very nice. And then they changed the profit guidance, or the EBITDA guidance, should I say, from 605 to 625 million, which previously it was 620 to 650 million. So we saw around about a 3%, I think it was, on the midpoint downgrade on the EBITDA guidance, which wasn't major. I think the market just threw it a lot more under the bus because it panicked about the CEO change, and then obviously another profit warning. And I think when the market digested it a little bit more yesterday, they're like, actually the CEO change could be quite good for the business here, and actually the profit warning isn't that big of a profit warning, so it should be okay. And also they mentioned as well I think it was financial currency exchange, exchange rate volatility. Once again, obviously, blame our government, but how much of that is kind of priced in now. And they put a few more statements here as well about my time and all that sort of thing. So yeah, I mean, overall I looked at it and it wasn't great. It wasn't great. Do I think the stock deserved to go down 10% yesterday? At the worst point, I don't think so. I don't think it should have gone down that much just because of how low it is. 8 times earnings, 7 times earnings. You get, it was at a 6% dividend yield at that point. How much more fear do you want, baked in? The profit is they're still growing at okay rates. The profit is still very good. It's not going to be hard for a company like this to, grow another 3-4% a year. The game plan's very easy with B&M. Open up more stores. They've identified that they can nearly double the store footprint in the UK. You got to look at the France expansion. The France expansion is going, really well for them. If I just have a little bit of a scroll up here, what was it growing at last time? 10% growth. So all they need to do is, keep opening some of these B&M France locations, which seems to be doing very well for them. That's the easy game plan with B&M. It's there for them to execute. They've just got to go do it now. As well as that, obviously still, decent growth, good amounts of profitability. One thing that I would like from the new management team when they come in is I would prefer for them to just strengthen this balance sheet up a little bit at the moment. 964 million of debt. I would like the debt to maybe be brought down by half. I would prefer them, rather than doing any more special dividends going forward, is to just bring that debt pile back down to these sort of levels a little bit if they can. That would be my preference. But I think the CEO, whichever CEO comes in, they've got a clear game plan from B&M. There's an easy platform for success. I think there would be some candidates that would be quite eager to take it, and I think they actually said that they are quite higher on than on the recruiting of the new CEO as well, I think somewhere down here. So I guess that kind of puts it down to like, what did I do with B&M, I guess. So yeah, I bought on this dip. I put a post out yesterday on Patreon, and that's why it's good to have the Patreon guys. We're all talking about it in real time. Links in the description. So I put a little bit of a note out on Patreon. I did buy B&M. I was a little bit nervous about how buying more into the UK markets. I don't want my portfolio to come too heavy UK markets. I think it could still be a tough time for the UK markets for the next 12 months. So I wanted to buy it quite heavy, and I thought I can't put loads of cash in because that would mean my portfolio to the UK side would get bigger, and I don't want that to happen. So what I did is I thought I'm going to have to take a profit from a UK stock here and put it in here. The one I decided to sell was CVS Group. It has been on a bit of a rally recently since I did start buying the position, as you can see here. So it's been on a bit of a rally. Took about an 18% gain off it. Not that I don't like CVS Group. I just think that it's just a little bit more, where compared to where I was buying it, there was bigger reward to the risk side. Now I think there's it's gone up a little bit, so the risk side's a little bit more there. The last update, the like-for-like sales were declining a little bit. They've still got the CMA investigation going on them. Obviously not the best balance sheet out there. With CVS Group, I don't really get a dividend to kind of keep me warm. When I was buying B&M yesterday, I was getting I would get a 6% dividend without any special dividends. Special dividends obviously push it up to like 10-11%. I was getting a 6% dividend for buying B&M yesterday. So I thought, and as well as that, B&M's like 7 times forward earnings. I think CVS Group's a lot higher. If I just have a quick look on Stockopedia, you can join Stockopedia with the link in the description, guys. It gives you 15% off. But yeah, looking at CVS Group, they're currently 20 times earnings on a forward basis, 11 times forward earnings or 10 times forward earnings. So yeah, CVS Group is what, 30-40% more expensive than B&M. So yeah, and then we don't know if the big expansion into Australia is going to work out for CVS Group. We've seen it before where they tried to move into other markets. What was it? Netherlands market, and was it the Ireland market or something? And it didn't work out for them. So we don't know if that's going to be successful. With B&M, I can already see like the France expansion is going to be successful for them. So that makes me a lot more confident. So yeah, I sold that off, and then what I was able to do is I was able to basically nearly double up my holding into B&M. It was a big buy. I went full allocation straight away, and I went, okay, I'm going to sit here and I'm going to see if it works out. I can't buy any more now. That's it. I can't buy any B&M anymore. If it goes up from here, it works out. If it goes down from here, it doesn't work out. That's where I'm at now. Fully allocated. We're going to sit back and see what happens here, and that was my plan yesterday. It might go lower from here. Stocks can always go lower, but I thought right now, lower than where we were in the CV times. I mean, how much lower can this keep going? I don't know, but you never know. So, but I went all in on B&M yesterday. Since I did start when I did double one position, the stock did start having a bit of a rally up, to be fair. So I'm actually only down like 7% on my position right now, which isn't too bad at all. I've got to say, because I did go so heavy into B&M yesterday, if the stock does go up to break even for me, I will just pull out a bit of the position, because I went so heavy yesterday, and then that would allow me that if it was to go lower, I could go and buy back some more shares into it, and that would give me bigger cash pile, the ability to start averaging down a little bit more. But I did go full allocation yesterday because I thought this is just. I thought the stock would be a little bit negative yesterday, but when it started going down like 10, 11, 12%, I was like, yeah, the CEO change, in my opinion, is actually probably good news. And let's not throw a stock down 11, 12% when we've already had, this tough time here. It's already at 7 times earnings. You're going to pick a 6% dividend yield up. You're just getting that's getting a little bit too stupid now for B&M. So, I thought it was a good opportunity to buy, and that's what I did with B&M. I did go buy it yesterday. So we'll see what happens from here. Hope you enjoyed the video anyway, guys. If you could hit the like button, I'll try to do that hims and hers video for you tonight. It's super busy today, but I'll try my best to get it to you. Like I said, it'll be a late one if I do get it to you guys. But yeah, thanks for watching, guys. See you in a bit.